Now let's say the investor has 5 million rand to invest and needs regular reliable income from, say, a bank investment, and he says that he needs 20,000 rand per month income from his investment, and he says he can get 5% interest on his bank investment. We've also entered an effective tax rate of 15%, not a marginal rate, an effective tax rate of 15%, and the client requires a 5% increase in income each year to help counter the effects of inflation. When we click on the Calculate button, SoftFin shows that the investment would provide the income required for 20 years only. To explain this, let's have a look at the Amortization Table showing a year-by-year statement of what's happening to the investment account. Now the Amortization Statement shows us in the first year our 5 million rand would earn after-tax interest of 212,500 rand. He needs 240,000 in the first year. That's 12 times 20,000 rand a month. So you can see the interest almost provide enough income. So he's got to take the balance out of the capital. The capital comes down a little bit in the second year because he's taken money out. It's earning slightly less interest. His income is going up, however, but because he keeps digging into the capital, because there's insufficient interest to pay the income, because the capital's coming down and down, the interest's coming down and down, but his requirements are going up and up, so he's on a road to nowhere. If we have a look at the end, you'll see here that in year 20, he no longer needs 240,000 a year. Because of the 5% inflation, he would now need 636,000 in year 21. He certainly doesn't have that. He only has about 160,000. So because at this stage he's drawing something like 53,000 rand a month, and he'll only have 160, in the 21st year it would only last him for 3 months. But in year 20 he has enough money. He only requires 606,000, which is about 50,000 rand a month, and he will have that because he'll have 729 plus 31, so he'll have enough for year 20 but not for year 21. We can also illustrate this table with a 3D color graph by clicking on the graph button. Now the color graph illustrates here in red the capital, and you can see the capital decreasing all the time. In blue, this is the income required. You can see that increasing all the time. And green shows our interest income from this investment. Now you can have a wonderful time with this toolbar that the graph package comes with. You can rotate these graphs, you can change the style of the graph, you can look at them from any angle, you can cut these graphs out just by clicking on a button and paste them into a Word presentation, etc. But as I said, you can change the style of the graph, whatever you like. If you click on this and you decide you'd rather have a line graph, just click on that and there's your line graph. The advantage of this type of bank investment is that it offers very low risk to your investment capital, but because of low interest rates and tax implications, it also means low income. To achieve better performance from invested capital, we have to look at a different type of investment, maybe one connected to the stock market. If an investor has a large lump sum to invest, then the financial advisor may advise splitting the capital between the type of low income, low risk bank investment we have just seen and a higher income but higher risk unit trust or mutual fund type of investment. This next calculator caters for the higher income but higher risk unit trust mutual fund type of investment, which is offered by big investment companies who invest your money in a basket of high growth funds. I don't have to mention company names, as you know who they are. I also don't want to spend too much time here explaining how these investments work, as most investment advisors are very familiar with them. But the SoftFin Help document explains it all in detail anyway. Now this is our calculator for income from share capital, and you can see here that I've entered the same amounts we entered into the bank investment calculator. That's 5 million rand invested in a basket of different shares, and I've said 9% growth on those shares, and we're going to draw 20,000 rand per month or we can draw annually, but I've said monthly, and I've asked for a 5% escalation on the income, same as in the bank investment. And you can have a look down here at the bottom. In year 20, we will be drawing 606,000 Rand a year. That's a shade over 50,000 Rand a month. Let's superimpose the bank investment calculator details on this, and there you can see, remember in year 20 our income was 606,000 Rand for the year, and we can see here that in year 20 we'd have 729,000 of our capital over, whereas look down here with the share capital event we would have 7.3 million. Now obviously with that amount of money over in year 20 we can take more income. We can either take more income initially, but let's say we're quite happy with 20,000 Rand a month, but we'd like to increase the inflation factor, the escalation factor, so let's make that 9%. Click on calculate, and we'll see here that in year 20 we're not getting 606,000 Rand in that year, we're getting 1.2 million. And that is just over 100,000 Rand a month, not 50,000 Rand a month. And you'll see there we'll have 384,000 Rand over in year 20. While income from a bank investment is purely interest, income from a share or unit trust type investment is obtained by selling some of the shares or units to generate profit. The profit you make when you sell the units or shares is subject to capital gains tax. The actual effective rate of tax on the profit when the shares are sold is very low, less than 9.9%. In this field here, the program allows you to enter an effective rate of tax on the profits. Clicking on this button here will display info on how the program works out the capital gains tax and what rate you should enter in the effective tax rate field. A portion of income from shares or units is interest, and this is a valid point to consider. Clicking on this button will display a note explaining that interest earned may only become a factor if you have millions invested in funds which are heavily exposed to bank investments. A quite reasonable effective rate for CGT on the sale of these shares would be 2%. So if we entered 2% on here and clicked on calculate, we would see the amount of capital gains tax that we'd have to pay in every year. It's virtually negligible. I mean, look at year 20, we're earning 100,000 Rand a month, 1.2 million Rand in income, and we're only paying less than 5,000 Rand in capital gains tax. Now, as I said, the beauty of this calculator is that you can change any of these amounts here. Let's say that we decided to start off with more income, maybe 27,000 Rand a month. Just enter that there, click on calculate, and then you would see that our investment would run out of money in year 15. Changing that back to drawing 20,000 Rand a month, and there's our income situation. Now we have some option buttons at the bottom of the screen. If we click on the amortization button, you'll see here we have a table in months of exactly what's happening to our capital and our income trail. That's the first 12 months. If we scroll down one more month to month 13, you will see there the income increases in the first month of the second year to 21,800. And if we go through to the end of the second year, that's month 24, you will see the CGT that's payable at the end of that year, 107 Rand. And if we go up to month 25, the first month in the third year, you will see there our income has increased again by 9%. We also have the graph button, we have a print button, and default rates. Clicking on default rates opens a window which allows us to set up our commissions and admin fees and dividend payouts and management fees, etc., as well as trail commission. Clicking on the print button, we can then have the option to direct our report straight to the printer. We can export our report to any other format. and we can ask the printed report to either include commissions or not include commissions.